Again, no need to worry about knowing how to calculate this, as this indicator is typically built into all the stock charts. Again, it is a standard in all the stock charts. I don't use this a lot and never as a standalone indicator. So I do use it on my charts while I'm day trading, but it's always in tandem with some of the other indicators. What is this indicator? This indicator forms a channel around the price movements of a stock. Now, these channels are based on standard deviations, typically at a level above and below a simple moving average of the price. Typically, this is the setup. So this middle band is a simple moving average. The upper and lower bands are positioned on either side of the simple moving average band. Now, because the distance of the bands is based on standard deviation, they adjust to volatility swings in the underlying price. Now, what are these parameters? Bollinger Bands use two parameters, period and standard deviations. Now, the default values are 20 for the period, which is the 20 period simple moving average, and 2 for standard deviations. And you can pretty much customize these combinations. When you're doing short-term trading, you typically use a 10-day moving average for this middle line, and then you end up using 1.5 standard deviation for the bands. Now, for medium to long-term trading, typically they use a 20-day moving average and 2 standard deviation, which is what is shown here. But for long term, you can also consider using a 50-day moving average for this middle band, and then 2.5 standard deviation for the upper and lower bands. Now, what are the uses of Bollinger Bands? There are a number of uses, such as determining overbought and oversold levels, as a trend following tool, for monitoring breakouts, volatility, and even spot potential reversals. When it comes to the overbought and oversold, an oversimplification here is when the price of the stock breaks below the lower band. Prices have perhaps fallen too much and are due for a bounce. On the other hand, when the prices break above the upper band, the market is perhaps overbought and it's due for a pullback. Keep in mind, during a strong trend, though, you could run the risk of placing trades on the wrong side of the move because the indicator can flash overbought or oversold signals too soon. A useful way to trade with this indicator is to gauge the trend. Again, another oversimplification here, for example, is if a stock is in an uptrend, you can consider buying the stock when it touches the lower band. And likewise, if it is in a downtrend, you can consider shorting the stock when it touches the upper band. Now, usually during an uptrend, if the price is moving strongly, then pullback lows will typically occur near or above the moving average, which is the middle line. Now, the pullback doesn't have to stall out near the middle line, but it does show strength if it does. When the price is in a strong uptrend, it should not touch the lower band. If it does, it's a warning sign of a potential reversal. Again, this is useful for spotting trend reversals. So if the price is in an uptrend and continuously hitting the upper bands and not the lower bands, when the price hits the lower band, it could signal that a reversal has commenced. Now, if the price rallies again, it likely won't be able to reach the upper band or the recent price high. Again, this is just a guideline. It does not have to work all the time. Keep in mind that approximately 90% of price action always occurs between these two bands. Any breakout above or below the bands is a major event. Now, the breakout is not a trading signal. The mistake that most traders make is believing that the price hitting or exceeding one of the bands is a signal to buy or sell. Again, breakouts provide no clue as to the direction and extent of future price movement. Like I said, this is not a perfect indicator, so don't use it as a standalone indicator. This is just a tool. I will show you an example to pull these Bollinger Bands on some of the stock charts. Like I use bar charts and stock charts. Let's dig into that. So let's go with bar charts to begin with. like Google. Let's pull up Google stock chart. I'm gonna go full chart. There you go. Bollinger Bands is added. I think I added this previously, so I can see the bands being charted here. Again, you can see. So in this case, based on the theory that I mentioned a few minutes ago, if somebody thinks that at this point the stock is overbought, it's going to go down to the lower band, then they're in for a trouble because the stock kept moving up, kept moving up. But here it started to go down to the lower band. Again, it's a lagging indicator, so you cannot really predict. So you're just following what's going on pretty much. But again, you can anticipate at some instances, you can definitely anticipate. In this case, for example, like I mentioned, it pulls back to the middle band, which is the 20 period moving average line here, and then it bounced back. So if you want to go long, you can go long here because the trend is intact and you can go up. Well, the stock will go up. Right here again, it's trading in a range. The bands are becoming narrow. So here is another thing. If the bands become narrow, chances are that it could be expected to become volatile. Like the bands, like the price movements can be expected to become volatile. So once the band expands, you can expect the bands to contract while volatility to contract. That's just another guideline. So I'll also show you another example in stockchart.com. How to add this indicator. Let's again Google. I like Google just to showcase here. So here you do not have the Bollinger Bands. I'm going to show you how to add this. So let's say Bollinger Bands, and the standard or the default is like 20 period moving average with 2 standard deviations. Again, if you want to change this, if you're doing short-term trading, we will do 10, and then this is 1.5 standard deviations. And let's see how the prices are reacting. Well, the Bollinger Bands are reacting. So again, you can use this just to see how the prices move within the bands for the most part. So I think with this, you will get an understanding of how to add Bollinger Bands to your stock charts. And you can go back to the video where I explain how to use these bands while trading.